This is the WASP network that stands for Wealth and Health Strategy Partners. If you're watching this video, that means you're already a partner with us in building wealth. Let's get right into today's topic. We will be talking about your retirement. That's right, you. We also will talk about the different investment types. Stay tuned for some very important information right after this intro break. Hey, welcome to the channel. If you like content that keeps you up to date on the markets and helps you build long-term wealth, make sure to hit that subscribe button. If you're watching this on Facebook, click the link above or in the bio to follow us for exclusive content. This is the WASP Network, Wealth and Health Strategy Partners. If you're watching this, you are a partner with us in building wealth. Let's go to today's lesson. When it comes to investing on Wall Street, there are several main investment vehicles you'll want to understand. These include 1. Stocks, 2. Bonds, 3. ETFs, exchange-traded funds, 4. Mutual funds, 5. CDs, certificates of deposit, 6. Money market funds. Each of these has different levels of risk and return, and the best one for you depends on two things: your risk tolerance and your financial goals. Let's break it all down. Stocks. Stocks represent ownership in a company. When you buy a stock, you're buying a piece of that company. If you're younger and have years before retirement, stocks can be a powerful way to grow your wealth. Historically, the S&P 500 has returned about 10% annually over the long run. Bonds. Bonds are like IOUs from companies or governments. You lend them money, and they pay you interest. They're a solid option as you get closer to retirement, or if you just want to reduce risk in your portfolio. 3. ETFs. ETFs are collections of stocks or bonds that trade like individual stocks. Think of them as bundles. ETFs often track indexes like the S&P 500, which is why they're common in 401k and other retirement plans. 4. Mutual funds. A mutual fund also pools money from investors, but it's professionally managed. Unlike ETFs, they're priced once per day and don't trade like stocks. They're used heavily in retirement plans and often include growth, income, or balanced fund options. 5. CDs. CDs are savings products with a fixed interest rate and fixed term. Your money is locked in for a certain period, but it's FDIC insured, so there's virtually no risk. 6. Money market funds. These are low-risk funds that invest in short-term debt. It's like a supercharged savings account, low return, but very safe and liquid. Let's talk about which of these vehicles makes the most sense depending on where you are in life. Young investors. You've got time, so you can take more risk. Focus on stocks and ETFs for growth. Midlife investors balance growth and security. Include some bonds or mutual funds. Retirees 60 years and older prioritize safety and income. Money market funds, CDs, and some bonds are common choices. If you have a 401k, you're already investing. Let's get one thing straight: if you work a 9 to a 5 and have a 401k, 403b, or similar retirement plan, you're already an investor. Over 99% of retirement plans are built around mutual funds and ETFs, usually tied to major indexes like the S&P 500. When you were hired, you probably picked a target date fund or risk level, and based on that, your money was allocated across these investment vehicles. Even if you're not active in the market, it's still your money, and it's growing or not growing, depending on where it's invested. Markets change. You should adjust your strategy over time. Fees matter. ETFs are often cheaper than mutual funds. More control equals more power. Learn what you're invested in and why. If you're unaware, you might be leaving money on the table, or worse, putting your retirement at risk. Your retirement is likely riding on one or more of these investment vehicles. Whether it's through a 401k, Roth IRA, or brokerage account, make sure you understand what you're in. If you don't manage it, who will? Wall Street isn't just for the wealthy, it's for the informed. Thanks for watching. If this helped you understand how to grow your money smarter, make sure you subscribe, share, and stay tuned for more content from the WASP Network, Wealth and Health Strategy Partners. You're not alone on this journey. You're a partner. See you in the next video.